Your cash is dying. Slowly. Right now. In your bank account. Not because of theft. Because of inflation. Because of war. Because governments print money to fund conflicts. And every printed dollar makes your cash worth less. In WWI and World War II, active participants saw their currencies destroyed. Germany's Weimar Republic, wheelbarrows of cash for a loaf of bread. The lesson from history is brutal. Holding the currency of any active war participant is nearly always terrible. By the end of this video, you will understand 6 assets that have survived every war, every depression, every currency collapse in modern history. You will learn why gold is called God's money, and why central banks are hoarding it right now. And you will walk away with a specific, actionable framework for protecting your wealth before the next crisis hits, because waiting until the war starts is too late. Welcome to the CEO Brain Library. High signal briefs for leaders with no time to waste. Here's the truth your banker won't tell you. Your cash is not safe. It's just slowly dying in a vault you can't access. Let's get into it. Financial experts who study survival look at one question: what assets preserve wealth when governments fall, supply chains break, and paper money becomes worthless? The evidence from WWI and World War II is clear. The United States was the notable exception. They came in late to both wars and were a massive economic engine before they joined. Everyone else? Destroyed. If your country looks like it is going to get into a major war, leave as quickly as you can with as much capital as you are allowed to take. But most of you can't leave. Or won't. So you need to know what to do with the wealth you can't carry across a border. Holding the currency of any active participant in a war is nearly always terrible. Gold or other hard money style holdings will generally outperform cash. Real estate, provided it doesn't get blown up or stolen to values. But generally not as bad as the currency. The TL doctor from a century of war. Leave if you can. If you can't leave, get out of cash. If your side loses the war, expect to lose it all. If your side wins, expect to lose a lot of it. This is your survival brief on the 6 assets that have outlived every war, every empire, and every currency. The first asset is the oldest. The one that has survived every empire, every currency, every collapses. Precious metals. Gold, silver, platinum. Gold was $400 per ounce before the 1950s. It crossed 2023. Some analysts project by 2032. Not because gold changed, because paper currency lost value. Why? Precious metals are scarce. They cannot be easily created. Governments cannot print more gold. Every dollar printed makes gold more valuable in dollar terms. But here's what most financial advisors won't tell you. In a real crisis, you need silver more than gold. Gold is for storing large wealth. Silver is for transactions. A gold coin is worth too much to buy a loaf of bread. Silver coins, especially pre-1965, US quarters and dimes, are recognizable, divisible, and trusted. The prepper rule: keep a stash of 90% silver coins. About $4,000 worth fits in a 2-foot section of PVC pipe. Seal it. Bury it. Hide it behind an appliance. The lesson: physical possession matters. ETFs are convenient, but when the grid goes down, you cannot trade a digital receipt for food. Hold it. Touch it. Own it. The second asset is one that cannot be printed, hacked, or carried away in a briefcase. Real assets. Land, property, and infrastructure. Think about what happens when a currency collapses. The rich don't buy stocks. They don't hoard cash. They buy land. Why? Because land is finite. There's no more being made. And people will always need somewhere to live. Somewhere to grow food. Somewhere to be safe. Real estate prices in the US tripled between 1992 and 2020. Despite the 2008 crash. Despite every recession, land doesn't depreciate. But in a war scenario, not all real estate is equal. A city apartment can be bombed. A suburban house can be looted. Rural land with water access, arable soil, and defensible boundaries? That's the gold standard. The prepper rule: if you can't afford land, buy REITs, real estate investment trusts. They let you own a slice of real estate without buying property directly. The lesson: real assets provide a hedge against inflation in a physical, Refuge when cities become dangerous. If you own land with a water source, you own survival. The third asset is the one that powers everything else. Industrial commodities. Oil, natural gas, copper, cobalt, nickel, and agricultural products. Wars are fought over oil. Supply chains collapse without copper. Electric vehicles don't exist without cobalt. Every single one of these commodities has rising demand and limited supply. In 2022, during the Russia-Ukraine war, the S&P 500 dropped 10%. Energy stocks rallied. Why? Because war disrupts supply. Disrupted supply means higher prices. And in 2026, with Middle East tensions escalating, oil prices have already seen massive spikes. Cobalt prices doubled between 2012 and 2022, from
20,000 to 40,000
per ton because demand for electric vehicle batteries exploded. The prepper rule. You don't need to buy oil futures, but you should own things that benefit from commodity demand. Mining stocks, energy ETFs, agriculture funds. The lesson. Commodities are the nervous system of the global economy. When war hits, that nervous system shorts. Prices spike. Those holding commodities win. The fourth asset is a currency, but not yours. Safe haven currencies. The Swiss franc, the British pound, the Chinese yuan. During the Eurozone debt crisis, the Swiss franc surged. During the Russia-Ukraine war, it surged again. Wealthy people don't flee to dollars when things get bad. They flee to Switzerland. Why? Because Switzerland has not fought in a war since 1815. Their banking system is stable. Their currency is backed by real assets. When the world burns, the Swiss franc appreciates. The prepper rule. You don't need a Swiss bank account, but you should own some exposure to safe haven currencies through ETFs or Forex instruments. The lesson. Diversification isn't just about asset classes. It's about jurisdictions. If your country goes to war, your currency will devalue. The country that stays neutral benefits. Look at the USA in WWI. And World War II came in late. Stayed neutral initially. Became the world's banker. The Swiss have perfected that strategy for 200 years. The fifth asset sounds counterintuitive, but it's essential. Government securities, treasury bills, notes, and bonds. Since 1971, every fiat currency has been backed by the government's full faith and credit. In a crisis, governments may be the only institutions still standing. During the COVID crash and the 2022 war, treasury bonds provided stability when stocks were crashing. But not all government securities are equal. A U.S. Treasury bond is different from a bond from a country at war. The lesson from World War II. If your country loses, its bonds become worthless. If your country wins, they survive, but devalue significantly. The prepper rule. Own bonds from stable, neutral, or powerful countries. The United States, Switzerland, Germany. The lesson. Sovereign guarantees are safe, but only from sovereigns that will survive the war. Bet on the winners, or bet on the neutrals. The sixth asset is controversial because stocks feel risky during war. Value stocks. Companies with steady demand, pricing power, and global operations. During the 2022 Russia-Ukraine war, defense stocks soared. Energy stocks soared. Cybersecurity stocks soared. Broad markets dropped, but specific sectors thrived. The companies that survive wars are the ones that provide things people need regardless of conflict. Utilities, healthcare, defense, energy, consumer staples. The prepper rule. Don't try to time the market. History shows that investors who continue investing during downturns outperform those who try to time the bottom. The S&P 500 has returned about 10.4% annually since 1926 through depressions, world wars, and pandemics. The lesson. Cash in a bank loses value. Stocks in good companies grow over time. When markets crash from fear, that's the time to buy, not sell. You now know 6 assets that outperform cash during war. But here's a question none of the finance experts answer. What happens when the grid goes down? Not a theoretical question. In a small town on the California-Nevada border, a backhoe cut the only communication line. Credit cards wouldn't work. The gas station owner yelled, "Do not swipe. Cash only." Someone swiped anyway. Locked up the pumps. People ran out of gas. That was one cable. Imagine a cyber attic, a war, an EMP. The entire financial system goes dark. The prepper rule for grid down scenarios. Physical cash. Keep $500 minimum in small bills. Enough for gas, food, a motel room. ATMs won't work. Credit cards won't work. Cash works. Silver coins. If cash becomes worthless, silver is recognized. 90% US silver coins are the global standard for barter. Firearms and ammunition. For protection. A .22 pistol is accessible for most people. A Glock 19 is the common standard. A shotgun is versatile for hunting and defense. Stock ammo. Train regularly. Water and food. Hydrate or die. Store what you eat. Minimum 1,200 calories per day per adult. Ripple that under stress. Canned food works. Freeze-dried is better. Tools and cordage. Paracord. Duct tape. Vice grips. Lyman's pliers. A hacksaw. Fixed blade knife. These fix everything. Community. Your neighbors are your greatest asset. Skill art. What can you do? What can they do? Barter labor for goods. A community survives. A lone wolf starves. The lesson. Financial assets keep you wealthy. Tangible assets keep you alive. You need both. Let me give you something the mainstream won't. As of May 2026, with Middle East tensions escalating and oil prices surging, institutional investors are not buying energy stocks. They're rotating out. Why? Because energy stocks have already rallied 36% in the first quarter of 2026. They're expensive. They're exposed to the very conflict driving their prices if tensions de-escalate. Energy crashes. So where the smart investors put in money? Utilities and healthcare. These sectors are defensive. They don't depend on oil prices. Healthcare demand is non-cyclical. People get sick regardless of war. Utilities have pricing power and infrastructure investment tailwinds. The prepper rule. Follow the smart money. If the conflict escalates, utilities and healthcare hold value. If it de-escalates, energy crashes. The asymmetric bet is on defense, not offense. The lesson. War investing is not about predicting the outcome. It's about positioning for multiple outcomes. Real assets, defensive sectors, physical holdings. 3 things. No complacency. Do them. First, audit your cash exposure. How much of your net worth is in cash? In one currency? In one country? If the answer is most of it, you are exposed. Diversify. Second, acquire one tangible asset this week. A silver coin, a water filter, a week of freeze-dried food, a fixed blade knife. Start small, but start. Third, build your community network. Who are your neighbors? What skills do they have? What skills do you have? Start the conversation before the crisis, not during. That's a survival upgrade. 0 permission needed. The only thing stopping you is the belief that it won't happen here. Your cash is dying. Slowly. Right now. Not because of theft. Because of inflation. Because of war. Because governments print money to fund conflicts. And every printed dollar makes your cash worth less. The 6 assets that have survived every war, every depression, every currency, collapse in modern history. 1. Precious metals. Gold, silver, platinum. Scarcity cannot be printed. 2. Real assets. Land, property, infrastructure. Finite, necessary, safe. 3. Commodities. Oil, copper, cobalt, food. Demand rises when supply chains break. 4. Safe haven currencies. The Swiss franc. Stable countries win. 5. Government securities. From winners and neutrals. Sovereign guarantees. 6. Value stocks. Companies that survive anything. Utilities, healthcare, defense, and the reality check. Financial assets keep you wealthy. Tangible assets keep you alive. And as a reward for those of you who made it through, because most people click away when confronted with uncomfortable truths about their own vulnerability. Here is your well-deserved bonus. Everything you learned today is useless if you don't act. Knowing that gold outperforms cash doesn't protect you. Buying gold protects you. Knowing that you need water doesn't keep you hydrated. Storing water does. The difference between prepared and unprepared is not knowledge, it's action. This is CEO Brain Library. High signal briefs for leaders with no time to waste. If this landed, and it probably made you uncomfortable, subscribe. Until next time, stay prepared. Not scared. Prepared.